In this video today, I'm going to be talking about my leverage trading strategy for the next bull run. So as you may know, a lot of the top coins are already huge in market cap. They're not going to do that many X's, right? So in order to make a good amount of money from trading these large caps, it's either to get lucky and invest into one that does a 10x, like Solana did a 10x in the bull run that we had in 2023, 2024, for example. And there were some other good ones, right? But for the mid caps and the large caps, you need a big lump sum of money really to put down to make a good return. And then you've got your money tied up into these plays, and then you don't have any money left over to trade any other coins, right? So you just kind of have to lock your money up and then just leave it there for a long time in order to win at these big coins, which is fine. If you're just a long-term investor, you just want to hold for a really long time, then you can buy the top coins and wait a long time, right? But for a lot of us, we want to make money faster than that, right? And we want to have more money to trade a bunch of different coins, right? So what leverage does is it allows you to trade the bigger coins and still get a good return without tying up too much of your money. So for example, the bigger coins up here, Bitcoin, Ethereum and stuff like that, XRP, Solana, the bigger coins, you can maybe use 10x leverage, 5x to 10x leverage is probably okay. And as you go down to the mid caps, you can use like maybe 2, 3x, maybe up to 5x leverage on the medium caps down here. Anything under 50 million, you don't need leverage because the sub 50 million market cap coins, they move a lot anyway, right? You don't need a leverage on those. That's just crazy to use leverage on such small coins. But the medium caps and the large caps, you can use leverage, and the larger the cap is, the higher leverage you can go, really, right? So then you can make a decent return from the larger coins without tying up all of your money into them, okay? So this is why I've been designing a leverage trading strategy to use in the next bull run. I've been kind of playing around with it, kind of tweaking it to kind of get it right, but I'm not going to go balls to the wall with it until the bull run kicks off because the market's not exactly good right now. So I'm not really trading too much. I'm trading a little bit, and I'm looking for good coins that I can hold for the bull run. But I'm not doing many trades right now because the market's, it's not great right now, is it? So I've been playing around with this strategy anyway. The strategy for the next bull run, and I'm going to use Pippin as an example because Pippin has been in a bull run, as we can see right here. So we use Pippin as an example. But just before I get into it, if you want to be part of an alpha Discord group, and find the best opportunities and have like a good support community going on, then I recommend you join mine now because mine is only $1 a month at the time, as this is the early access deal. The early access deal isn't going to be on for much longer. There's 9 members in here so far, so I'm only going to keep it $1 a month for a few more people. 20 people maximum. Once it gets to 20 people, then I might put it up before then, but for now, and then especially as the obviously as the market gets better, then I'm not going to keep it at this price because there's going to be way more people. Right now I can keep it cheap just whilst it's getting started, and obviously the market's down so people aren't really interested in crypto anyway. But obviously once the market picks up again, then it's not going to be this price. So if you want to be part of one of these groups, if you join mine now for $1 a month, you'll be locked in at $1 a month for as long as you want, okay? Whatever price you pay is the price you pay for as long as you want to be in the group, right? So that's the deal. You can see my trade alerts in here, keep up to date with my trading activity, my watch list of coins I'm watching, and obviously you can collaborate with other degens in the group. And this community is only going to get bigger over time, right? So it's going to get bigger and better. So the earlier you get in, the better deal it is for you. So yeah, I'll put the link for this down in the description if you're interested. And you also get access to my full beginner DeFi trader course for no extra cost in this group. So yeah, again, link is down in the description for this. Okay, so to my leverage trading strategy for the bull run. So we're going to be using Pippin as an example because Pippin has been in a bull run by itself, even though we've been in a bear market overall, especially for altcoins. Pippin has been in its own bull run. So we use Pippin as an example. So the first step to this strategy is to see, is there momentum building and is there a trend forming? Okay, so you might have seen this. Obviously you can see it now because it's already happened. But back here you could see Pippin was flat all this time, right? And then you kind of saw some candles come in here, volume was coming in down here, and it's kind of picking up some momentum, okay? So you can see that a trend could be forming here, which obviously it did form, and it went a lot higher. So if you see a trend forming, this is the strategy. You see a trend forming somewhere, and then you're basically looking for an entry, right? So that's the hardest part, is getting an entry. Once you've got an entry into a trade on leverage, from there it's easier. But just getting the entry is the hard part, because once you've kind of gotten into the trade, the price has gone up past your entry point, you can raise your stop loss up and you de-risk yourself, and then from there you just got to manage the trade. It's a lot easier. The hardest part is the entry, because The entry is the part where you're risking basically, and then from there it's mostly all smooth sailing unless you get some crazy big liquidation event, which is why you take profits along the way and you de-risk yourself along the way, which I'll get into in a bit. But yeah, first step first, you've got to get an entry. So you see a trend forming and you might want to get an entry in here, right? But we're going to be using this leg here, the most recent leg that's just happened, for an example here. So if we zoom into the 4-hour chart now, we see there was a lot of volatility going on around here, and then it kind of bottomed out and built a floor around here, right? Volume was down and it was just kind of, the price was just going flat sideways, okay? And then from here we saw some green volume coming in and some green candles coming up, right? So from these green candles here, you might think, oh, a new trend is forming, momentum's coming back, and you might want to try and get an entry here, okay? So we zoom into this onto the 1-hour chart now. So after these green candles here, it had a big pullback here. So you don't really want to catch a falling knife. You might want to wait for some sort of confirmation, which you did get after that. You saw some green candles climbing back up. So you might want to get in during these green candles, right? So as the candles are climbing up, you might want to put your stop loss beneath this wick here, the recent wick, and just enter, you know, after this first candle closed, for example, and the next candle was green as well, you might want to enter somewhere around here and just keep your stop loss down there. And then after that, you could wait for the next low to come in. So the next low was around here. So then what you want to do after it bounces off of there and goes up again, you want to bring your stop loss underneath this low. So now your stop loss is at break even, okay? As the trade goes on here, you know, after the trade breaks out past this high here, you know, you can move your stop up to here, for example, right? And obviously as it goes on, you can just move your stop up underneath this low. And then as the trade goes on, you can move your stop under this low, and then you just keep on trailing your stop, okay? You keep trailing your stop all the way up, and then eventually when it reverses, it will hit your stop. So you're not taking profit really on the way up, you just raise your stop until your stop gets hit basically, and then you're out. Simple as that. And you can either take profits along the way if you want, but a good way to do this is to actually increase the leverage. So let's say you're using low leverage, you're using 3x leverage or 5x leverage or something. What you can do is, let's say your liquidation price, so this red line down here now is the liquidation price, right? At first, let's say the liquidation was down here, so you couldn't increase the leverage down here because it would make your liquidation price too close, okay? Because when you started off, let's say it was all the way down here, your stop loss was here, right? And your entry was here, stop loss was here, liquidation price was here, okay? Now as you put your stop up, so let's say you move your stop up to here, okay? Now what you can do is you can take money out that you put into the trade and just increase the leverage. So now the trade is running on pure profit. The trade is still the same size, but you've just increased the leverage. So you've taken all of your money out that you put into the trade, but because there's profit in the trade, you just increase the leverage, and then the profit is keeping the trade going, okay, because you've increased the leverage, if that makes sense. So that will bring your liquidation price up as you go along, but because the trade's moving on anyway, you move your stop up here, you know, and then you increase the leverage even more, and then you can bring the liquidation price, you know, the liquidation price will come up because you're increasing the leverage. Yeah, and then you can take profits, and then again just increase the leverage, move the stop up, increase the leverage, take profits as you go, the liquidation price will come up, and you can just keep on doing that, right, until you're out of the trade. So this is basically the strategy I'm using for the bull run, simple as that. So I'm basically either getting in on pullbacks like I just showed you down here. So I showed you down here getting in on the pullback, and then as the green candles come in, jumping in on the green candles after the pullback. I'm either trying to get in at those points or on the breakout. Okay, so here you can see here there's you know, there's a clear resistance line here, right? It's coming up, it's resistance here at this area, and here it broke through it. Okay, so if you enter above here, as you can see here, it was resistance, right? And you can see this candle closed above these wicks, okay, and then you've got a big green candle here. So this is a classic breakout candle. So you might just hop in somewhere around here, right? You enter here, you put your stop, you know, just beneath it somewhere, maybe just beneath the candle, or you can put it lower if you want, it depends. You might get stopped out. Obviously the closer you have it, the more like you will get stopped out. So you can put it down here if you want. It just depends, you have to kind of fiddle with that. But yeah, maybe your liquidation price will be down here somewhere, and yeah, you just hop in on the breakout, right? And then obviously it broke out. This is what normally happens on a breakout. The candle shoots up, and then because the price shot up, now, you know, you just watch the price run up like this, and then you can move your stop to here. So now your stop loss is in profit. Okay, so now you've got a risk-free trade, and then again the trade runs up to here, You know, the trade stops here and then it pulls back a little bit, but then it continues up. So now you bring your stop up to here, right? And now you want to take some profit, so you just increase the leverage. You take some profits out and increase the leverage, and then it brings your liquidation price up to here, for example, but your liquidation price is still way lower than your stop loss, so it's still safe to do that as the trade runs. So yeah, this is pretty much my strategy in a nutshell. Just either getting in on the pullbacks or on the breakouts. But right now I'm not using it that much. I'm just kind of playing around with it. I've been playing around with it on Pippin and some others as well. But obviously we're in a bear market overall right now, so I'm just kind of fine-tuning this strategy really. And then when the bull run kicks off, I plan to use this strategy properly for the mid-cap coins and the large-cap coins. But again, anything under 50 million market cap, you don't need leverage. Just trade those spot. Just buy them, hold them, and then sell them when they go up. Simple as that. But yeah, the mid caps and the large caps, this is the strategy I'm going to be using in the bull run, in the next bull run. And I think it's going to work out pretty good. So yeah, that's it for this one. Drop a like if you thought this was a good little tutorial. Don't forget to subscribe and check out my group. Link for that is in the description. Thanks for watching. See you in the next one.